Good morning. It's Market Day Report. So glad you're with us. And look at that canola in the background. I've said this, well, probably too often, but we're seeing canola acreage in the U.S. expand even more. Well, since we have canola, let's look at the price. We've been under a bit of pressure here in the canola market as we're lower across the board. But again, this is a market that's gained 13% year over year. While we're here, here's the oats market. It's up 23% over the past month. And rice is in the red for the month, and you see mixed prices right here. Let's work our way kind of backwards. We're starting in New York with cotton futures at $80.48. That's a little more than 80 cents, and it's almost a half penny lower, trading down 39 points on the cotton market. Wheat, and we'll start with Kansas City here, or hard red. September contract, $7.29.5, half penny higher. We're watching soft red move up 2 3/4 cents, $6.62 3/4. How about soybeans? Well, the bean trade is in mixed territory. Old crop is mixed and a penny higher on new crop November, $12.14 3/4. And we'll end with the corn market. Again, a flash sale reported unknown destination, 7.8 million bushels. And December corn, it was, by the way, new crop corn. So December is $4.79, and that's a nickel higher. We've got Chris Swift with us. Chris is with Swift Trading in the studio. Chris, let's start with the feed grain side here, and corn moving a nickel higher, 11% higher month over month. And we're watching cattle prices pull back. Is that putting some pressure on the feeders?
Well, it is, and this may be a little strange to everybody, but we're in a bull market in wheat and soybeans and potentially have bottomed in corn. Corn the most interesting because for almost 2 years we traded in a really long sideways trading range, about 80 cents. We broke out of it to the upside. We made 505, 506 sometime early this spring, right back down again, and this time we took the bottom end out of it. Where are we right now? We got right back to the top end. We were back almost at $5 a bushel at Thursday, Friday last week. A new contract high in soybeans on Friday and a new contract high in the Kansas City wheat. So both those markets are still in bull markets, and they both, all three of them, have a huge wall of worry to have to climb. They're worried about supplies. They're worried about demand. They're worried about this year's crop. Is it going to be bigger than last year's crop? And all of those factors gives us a really good worrying point to climb up and see that these prices are still moving higher. They're in uptrends. And I think it best to look for pullbacks in this because we have done, you mentioned cattle going down. We seemingly have done a little bit of a reversal between those two. We're seeing our livestock market, protein markets move lower, and now we're seeing our grains and oilseeds move a little higher.
Okay, I want to throw out just a couple of thoughts here and get your reaction as we're looking at Chicago wheat at this point. Over the past month, up 84 cents here, 14.5%. Obviously, we have some outside factors working their way into the conversation. So that wall of worry that you talk about, what's happening in the Strait of Hormuz. Right. We've got what's happening in Russia, Ukraine. And then when it comes to corn, I'm kind of wondering, have we started factoring in the idea here of Brazilian moves when it comes to ethanol? They're switching now from sugarcane
to
corn. Is that something that could even benefit the market further if the algorithms ever pick up on that?
Well, it's possible. What I look at when you're considering energy, there's all the oil in the world. I mean, it's just underground. It's easily accessible to now, but we have an issue with the war. But when we look at the refined products, gasoline and diesel fuel is still right at new contract highs, as is gasoline, but not crude oil. And so now we've got a really interesting factor going into the fall of the year. What do I do with my fuel prices? I paid the highest ever this spring when I planted them. Now I'm fixing to come into the fall of the year. Do I wait and see if prices don't come back down another 50, 60 cents, or are they going to be up another $1 by the time we get to it? We're still about $1 off the high that we made in the March for the diesel fuel. So I think anything that you have to do with biofuels is going to continue to be important as long as we have a reduced refining capacity.
Okay. Right now we're looking at those diesel, that diesel market moving higher as well. And speaking of diesel, 89% gain year to date in diesel, 84% gain in gasoline, and the WTI is up 41%.
And those are undertones. Those are undertones for the grain and oilseed markets.
All right. How about a break here? And when we come back, we'll dig into the livestock sector. Got an interesting conversation coming up with Chris Swift. This is Market Day Report. Earlier, I was talking about year-to-date how row crops are performing. And you look at this market, it's actually up 21%. Year-to-date, it's hogs, yeah. And lean hogs, that front month August, 103.07. It's up a dime. We're higher on all of the deferreds as well. And again, obviously, we see that quite a discount there from the August to the October. Some seasonal moves here, but 88.20 on the October, and it's up 40. What's happening with feeders after the limit move lower yesterday? And we're talking about the October, November, and January contracts. Now we're seeing a turn back higher, except for the January, it's still in the red. August has been higher pretty much the entire session, 341.62. It's up 337, and a 482 gain on the September at 336.97. We'll come back to that in a moment. But first, live cattle were higher across the board, 226.82 on the August. It's up $1.60 on the heels of a little bit of short bought packer buying on Monday. So they bought Kansas at 228, so 227 there on the August, pretty close. Chris, let's go back to the feeder side. Limit lower move in those deferred contracts. What happened yesterday?
Well, we had discussed weeks ago about the congestion that we saw starting at the center of the plate and working its way up, and increased beef production, increased domestic production, increased imported beef, and now all of a sudden we open the Mexican border, and now we're going to have more cattle to work with. So that's probably what gave it the larger move, and everything happened in the back end. Those cattle aren't here yet. We'll see that. Note that the September contract was up 5, the rest of them only up 1 or 2, and that is because you still got the basis convergence that's going to have to take place, but more producers are going to have more cattle to work with, and so I can just assume that someone in the southern states there that has a feed yard is now no longer going to go to the sale barn to buy cattle, because in less than a week he's going to have inventory from Mexico that's going to be available to him that he's probably very used to working with for years and years. It's not just going to be starting. So it's a very important factor that says not only have we now rationed the beef through higher prices to our consumer, where we have stabilized consumer demand. I won't say that it's any better or any worse, but it has stabilized. Now we've got beef production through domestic and imported channels, and now we've got more cattle. So the top is in for cattle prices. I can't imagine anyone saying, well, I just want to pay more money for cattle, because they're not making any money off of them. And it's a huge turn. It's a cycle turn. We still, from the inventory report, saw no signs of expansion whatsoever, but we've caught up on beef production. So we could spend weeks, months trading sideways at a little bit lower range than where we are right now. It's probably not a catastrophe, but it's going to probably come into one as time goes by.
Okay. When we talk about reopening that border, and we're starting in Arizona, I know you work with quite a few feeders along the way. If that border doesn't open and we're talking about continued drought conditions, what does that do to the infrastructure if the border doesn't reopen, if we don't find more cattle for those feeders and for backgrounders, stockers, if you will?
It may be the last straw. So I think those that are still in business, that have been able to hold out through this thing, they now get a ray of light. If you take that away from them, it's going to be bad. Then they have no hope, you know, and really and truly, somehow or another, they were probably given some aspects of hope that, yeah, sooner or later, we're going to get this thing open. So they, like everybody, boy, if I can just hang on for a little while longer. Some were able to, but if you go and shut it back down again, they have no hope at all. And I see no reason for them to have to shut it down. And I go back to the point of, yes, there's not going to be a flood of cattle whatsoever, nothing like what has been coming across. But even though a small part to the whole picture, it's 100% of somebody else's business that lives down in that area.
And I know that this is throwing out, this is a tough one here, but if that infrastructure goes away, does it negatively impact the entire beef chain here in the U.S.?
Probably not by that much. We have done a huge consolidation of the industry as a whole for 30 years. We're going to continue to get it down to as lean and efficient production cycles as we possibly can. A lot of, looks at pork and poultry, the way those are vertically integrated. We know that the cattle industry has become vertically integrated in some forms, but there's still that efficiency. And then when we look at the beef dairy cross, we think, wow, that's the real efficiency right there. Why do we need all this huge range expansion and all? And clearly we do for the number of animals that we have, but do we need more? If we have already met our beef production needs, why do we need more cattle?
All right. Told you this was going to be a great conversation.
I don't know how great everybody's going to like that.
and I want to throw this out. I don't have a dog in the fight, so my opinion doesn't matter at all. Thank you, though, for allowing me to ask. These are tough questions to ask and tough to answer as well, so thanks for doing that.
I'm over here taking notes. So, yeah, always great insight. Thank you, Chris, for joining us again. And Tony, it's always great insight as well.